Okay, hey, thanks for joining me. I don't usually dress like this, but I have COVID at the moment, so that's the explanation. Don't have any clients to see today, and I'd be a very fake person if I dressed differently for this video, so not going to do that. This video is about appraisals, not about COVID, so let's go ahead and get into it. I want to run through this topic as quickly as I can while still providing you with a good understanding of residential real estate appraisals. I'm going to cover all the basics of the appraisal process from start to finish. I'll explain what the appraiser actually does, how they do it, and then what happens if it doesn't line up with what you need or you expected. I have or I will have other videos that go more in depth about the details of how an appraiser does their report, how they make their adjustments, and what is the best way or ways to contest it if you need to. In those other videos, I will show you actual appraisal reports and share some real life scenarios about how negotiations and appraisal challenges have worked out. Those videos might be out depending on when you have found this one. This video is just to get you a good understanding of the topic, and keep in mind this is specifically regarding an appraisal that is ordered for the purpose of obtaining a loan. When you are mortgaging or refinancing a home, you need to have an appraisal done. Your lender is the one who will order the appraisal, and they don't have much control over who is selected to do the appraisal. A lender can blacklist certain appraisal companies or appraisers if they find reason to do so, but gone are the days in which your loan officer can call in a favor from his appraiser friend, and you're also unable to direct who the appraiser is yourself. You may have heard about predatory lending and how it contributed to the market crash in 2007. Well, bogus appraisals played part. Nowadays, the lender must send their appraisal request through an AMC, which is an appraisal management company. They usually have more than one AMC on their list, and whoever is next up is the one who gets the order. The AMC will have several different appraisal firms in which they work with, and that's referred to as their panel. Whoever is due up on their panel is going to get the order. That firm who gets the order from the AMC is going to make the job available to their appraisers, and again, it is common for them to issue these jobs on a next in line type of basis and based on the availability. So we're going to continue this video with the understanding that you have no control over who appraises the property, and really neither does your lender. Now comes the day that the appraiser visits the home. The appraiser is going to do a couple of things during their visit. They're going to verify the square footage, so they're going to have to take measurements. They are required to report on the condition of the home, so they're going to take photos to document that. And outside of the photos to document condition, the appraiser will make a note of any major concerns or the existence of any hazards on site, and so on. Once the appraiser is done with their visit, they will create the appraisal report. In that appraisal report, they're going to compile the information, compare it to the other properties that have sold recently. For many reasons, they are required to go and drive by the comparable sales that they are using in the report so that they can submit an up-to-date photo of the exterior of that property also. Now, every geographical location presents its own unique set of challenges, which may allow for some flexibility in how far back in time or how far out in distance that the appraiser can or will look for these comparable sales. Again, there has to be a reason for it. The appraiser will be referring to the home that they are appraising as the subject property. The goal of the appraiser is to use comparable sales that are as close to the subject property as possible in the same overall condition that have sold the most recently. The appraiser also wants to use the same style of home in a similar size that has the same bedroom and bathroom count. Usually all those things are fairly easy to find or to get really close on, especially if you're in anything more densely populated than a rural area. But as I mentioned, the appraiser has flexibility here if there's reason to use it. The additional features that they mainly like to get close on would be the lot size, number of garage spaces, exterior features like patios or porches, the age of the home, finished rooms below grade, and things of that nature. If you are getting any concessions back from the seller, or if the comparable sales included seller concessions, those are also going to be noted. This is kind of a hot button for me because I've reviewed plenty of appraisals where the appraiser shows the concessions but does not adjust the value for those concessions. I will be covering that topic with a licensed appraiser in another video because although I understand it, I still disagree with it, but that's beside the point for now. Again, a good idea to subscribe to the channel so you can catch that video as it becomes available. So as the appraiser creates the report, they make adjustments for any discrepancies between the subject property and the comparables. For the record, the minimum number of comparables required is 3. What they do is they take each comparable and in simple terms, they artificially modify it to be the same as the subject property. So if the subject property has one more full bath than the comparable, the appraiser will pretend that the comparable has an extra full bath, and then they add value to the sale price of the home because, in theory, if it had the additional full bath, the home would have sold for more. The numbers that they use for these adjustments are usually way out of line with reality, but again, that's for another video. Of course, if the comparable property had one more full bath than the subject property, the appraiser will take away value from the sales price of the comparable because now we are imagining that the comparable property had the same number of baths as the subject, and in that case, it would have sold for less. They're going to go line by line, comparing all the features I previously mentioned, and make these adjustments as they see fit. There is not a uniform dollar amount in which they use for any one feature, so this is a practice that is open to some subjectivity in regards to who the appraiser is, and that should help you further understand why there are regulations in place that prevent you or your agent or your loan officer from handpicking your appraiser. So after the appraiser has made all the adjustments, they're going to record the adjusted values, add them all together, divide that number by the number of comps used in the report, and voila, this is the value of the subject property. Averaging it out like that, the way I just explained it, is technically the wrong way to do it, but it's going to get you pretty close to understanding how they do things, and it is essentially how the majority of appraisers seem to be operating. The comparables are supposed to be weighted in the order of the one or the ones with the least required gross adjustments having the greatest impact, with an explanation of such. But at this point, the report is done. They're going to send it back to the AMC along with their exterior photos, and then they get paid. The AMC is going to act as the first line of defense in the quality control department, so it's not uncommon for them to say, hey appraiser, you didn't do this part right, or you're missing something, or whatever, and then the appraiser has to fix it. Once the AMC is satisfied, they will send it back to the lender who ordered the appraisal, and that lender's underwriting department will be the second line of defense for quality control. Commonly, this is where the appraiser's notes get potentially unwanted attention. If the appraiser noted something about the condition of the home that gives the underwriter some concern, usually the underwriting department is going to require some sort of intervention from a professional in that field. Whether this is waterproofing that's needed, mold remediation, they're going to want a professional to either certify that there's no work required or to actually do the work. Of course, your lender, your loan amount in comparison to the appraised value, and the general understanding of what is typical for similar properties in your area will weigh heavily on whether or not you run into this issue. If your appraisal comes back at or above the price that you needed for your purchase or your refinance, then that's great. If it is a refinance, you could then increase the amount of money that you are taking on the home if that is of interest to you. If it is a purchase, you can just feel good about gaining some instant equity. Now, if it is less than what you needed it to be, you have a problem. Let's say you are buying a home for $300,000 with 5% down, that's $15,000. The appraisal came back at $290,000. So now in the eyes of the lender, the home is worth $290,000. They'll let you buy it for $300,000, but you're going to have to bring that additional $10,000 out of your own pocket, and you'll still have to provide your 5% down payment on the $290,000 value in order to keep the terms that the lender promised you regarding your interest rate, etc. The only bright side in this scenario is that your monthly payment will be reduced, but that is not a welcome trade for your additional cash out of pocket, especially with how low the interest rates are right now. You just went from $15,000 out of pocket to $24,000 out of pocket, and your mortgage payment only got lowered by about $40, $45 per month. That sucks. So just a few years ago, it used to be a given that the seller would just go ahead and reduce the price of their home to the appraised value, which was great for the buyer. In that scenario, you'd have saved $500 out of pocket, $10,000 on your purchase price, and your payment would also be lessened by that $40 to $45 per month. Now though, with so many buyers offering appraisal gap coverage and the existence of secondary or backup offers, you could very well be looking at bringing more money to the table or just losing out on the house. There are still instances in this market where the seller does reduce the price to meet the appraised value, but it definitely is not nearly as common as it was in the past. More commonly now, buyer and seller are renegotiating to a dollar amount somewhere between the appraised value and the purchase price from the contract, or the seller stays firm at a number, and if a buyer can't come up with the funds, that seller is just going to put the home back on the market. We really don't usually like that idea as realtors for many reasons, but there are situations where we may advise our seller client that that is a safe move and that is their best move to make as well. As with every situation in real estate, all the specific details need to be factored in before the right advice can be given. I can tell you I've definitely seen one case this year where I knew what was going on. My buyers had a specific price that they offered with some gap coverage included. The appraisal came back less than their stipulation on their gap coverage clause, so we were back to renegotiating. The seller didn't like our offer because, of course, they didn't. It was a pretty big difference between what they expected to get and what we were offering now based on the appraisal. So that seller put the home back on the market, and it ended up selling for, I think it was $3,000 less, which was only about, that's less than 1% of the whole sale price in that scenario, but still, they spent more time on market, longer length before closing, and lost $3,000 on their sale price. So this is why I stress on this channel that whether you're a buyer or a seller, you should always have a rockstar realtor working in your best interest. If you need help connecting with one in your area, please shoot me some details. I'll dip into my network and set you on the right path. That's it for now. If you need more details, you can do one of many things. Obviously, you can subscribe, activate the alerts. You can dive into my other videos now, or you can flat out ask me a question, and then if it isn't a quick response, maybe I'll reply with a video for you. All right, take care.